Hello, everyone. Welcome to Kagrat Trading. My name is Antonio Garcia, and today we're going to discuss a crucial topic. Why do most traders lose money, and how can you avoid it? We'll break down this video into two main sections. First, I'll analyze the leading reasons why traders lose money. And secondly, I'll provide key recommendations to prevent those losses. Let's dive in. From my experience, most traders lose money due to these reasons: lack of financial education, absence of a trading plan, poor risk management, emotional influence, overtrading. Regarding the first point, the lack of financial education, we should talk a bit about something I see all too often that ends up being a major barrier for many traders, both newcomers and veterans. I'm talking about the lack of financial education. Yes, that's right. I know it may sound boring, but let me tell you, it's incredibly essential if you want to succeed in the world of trading. And no, I'm not talking about getting a PhD in economics or anything like that. Don't worry. Trading is a complex field. There's no denying it. It's like a game of chess, but instead of playing against one person, you're playing against the entire world. And that requires a solid understanding of financial markets, knowing how things work, how the market moves, how global events can affect prices. All of this is crucial. And yes, it takes time to learn, but it's time well spent. The second point we're covering today: absence of a trading plan. Now, I know what some of you might be thinking. A plan? Seriously? But I just want to buy low and sell high. Well, let me tell you something, folks. If it was that simple, we'd all be millionaires. Entering the market without a defined strategy or a trading plan is like trying to cross the ocean without a compass, without GPS, and with no idea of where you're going. It's madness. Imagine you're sailing on the open sea. The waves are the market's ups and downs. The wind represents the news and events that influence prices. Do you know what would happen if you didn't have a plan? Well, you'd be drifted here and there, aimlessly, out of control, and you're likely to end up lost in the middle of nowhere. Or even worse, you might capsize. It's the same with trading. Without a plan, you can make erratic, disjointed decisions, which will probably lead to losing money, time, and emotions. And we're not talking about an elaborate plan, as if you're going to conquer the world. No, a trading plan can be as simple as defining your goals, determining how much you're willing to risk, what signals you look for to enter and exit the trade, how you're going to handle your emotions. In short, these are simple but fundamental things that will help you navigate confidently in this sea of possibilities that is trading. Another vitally important point: poor risk management. Some traders take too many risks, staking a large portion of their capital on a single trade. This can lead to significant losses if the market moves against them. Unfortunately, there's an insurmountable correlation between profit expectations and risk of bankruptcy, so you must correctly calculate the maximum risk you can assume to avoid losing all the money in your trading account. In my experience as a trader, I've observed that some take disproportionate risks, risking a large portion of their capital on a single operation. Although I understand the allure of such a move, the possibility of making a substantial profit in one fell swoop, I must stress that this practice is extremely dangerous. This can lead to a spiral of losses, as the pressure to recover lost funds can lead to even more risks being taken, which only increases the chances of an even greater loss. For long-term trading success, it's vital to learn to manage risk effectively. This skill may seem counterintuitive, especially when you see others making massive profits by taking huge risks, but in the long run, prudent and consistent risk management will be a determining factor in your success or failure as a trader. Remember, Trading is not a get rich quick scheme, it's a marathon. The key is to stay in the game, and the only way to do that is by managing risk properly. Therefore, I recommend that you risk a maximum of one of your capital on each trade. In this way, the equity and balance of your account will be more stable. Now let's talk about another aspect, perhaps the most important: emotional influence. Emotions can be a major enemy in trading. Fear of losing or greed to earn more can lead traders to make hasty and poorly chosen decisions. Have you ever heard that phrase that says, "Don't let your emotions make decisions for you"? Well, in the world of trading, that's never been truer. Let's make it clear: emotions are an integral part of our human experience. We can't eliminate them, and that's okay. Feeling fear, excitement, anxiety, euphoria are natural responses to different situations. However, when it comes to trading, these emotions can turn into a great enemy. It's important, dear listener, that we understand how fear affects us. That fear of losing, which makes us panic when we see that our trades are going against us or even in our favor. This can lead us to close a trade too soon, missing the opportunity for the market to recover and swing back in our favor. Or even worse, it can paralyze us and prevent us from making crucial decisions, which could mean losing valuable opportunities or not managing the stop loss properly and losing all our capital. And then there's greed, that insatiable desire to win more and more. This emotion can make us stay in a trade too long, expecting the market to continue moving in our favor, even when indicators suggest otherwise. This can lead us to not take profits when we should, or even to increase our exposure to risk in search of even larger profits. These emotions, among others, can lead us to make hasty and poorly chosen decisions. They can cloud our judgment, cause us to deviate from our trading plan, and ultimately result in unnecessary or total losses. The key here is to learn to recognize and handle these emotions. It's not an easy road, but it's essential for success in trading. Remember, trading is not a game of chance. It's an activity that requires discipline, patience, and emotional control. So, the next time you feel your emotions are starting to take control, take a moment, breathe deeply, and remember your trading plan. And always remember, each trade is an opportunity to learn, not only about the market, but also about yourself. Lastly, let's talk about overtrading. Some traders feel the need to be constantly in the market, even when there are no clear opportunities. This overtrading can lead to unnecessary losses. Let me paint you a picture. Imagine you're a lion in the savannah. Your goal is to hunt, but you're not going to pounce on every little creature that crosses your path, right? No, you're selective. You wait patiently for the right prey to appear, the one that's truly worth it. A similar patience is required in trading. But here's the problem: some traders feel the need to be constantly in the market, chasing every small opportunity that presents itself. It's as if they believe that if they're not trading at every moment of the day, they're missing out on something. And that, my friends, is a fatal error, which will cost you your capital and your emotions. You see, trading is not about who makes the most trades. It's about who makes the right trades. It's about having the patience to wait for really good opportunities, the ones that align perfectly with your trading plan. Sometimes, the best moves you can make in the market are the ones you don't make. Knowing when to stay on the sidelines can be as important as knowing when to jump in. Not every day is ideal for trading, and not all market setups are worthwhile. Sometimes there simply aren't clear opportunities, and it's better to wait for a more favorable environment. Even and related to the previous point, emotional influence. If your mood is not right, you have family, work, health problems, etc. It is important that you reduce or eliminate your trading frequency. This will keep you away from losses. As you can see, overtrading can lead to unnecessary losses. By being constantly in the market, you increase your chances of falling into poorly founded trades, and that is a sure recipe for disaster. Remember that in trading, we always seek the foundation of success, positive mathematical expectation. So remember, in trading, less can be more. Take the time to analyze the market, wait for the conditions to be right, and respect your trading plan. Don't rush into trades simply for the sake of being in a trade. Be patient and maintain discipline. In relation, the second part of the video, we must answer the question, what are my recommendations to avoid failure in trading? First, foremost, financial education. I can't emphasize enough how important this is. Trading is not a guessing game. It's a discipline that requires solid and up-to-date knowledge. Before you dive headfirst into trading, make sure you understand how markets work, how to interpret charts, how to use trading tools, and how to read economic indicators. Invest time in learning and improving your skills. Remember that even the most experienced traders never stop learning. The second recommendation is to create and follow a trading plan. Do you know what a trader without a plan is? A gambler. A trading plan is your roadmap, your guide that helps you make logical and consistent decisions, even in the midst of market volatility. This plan should include your goals, the strategy you will follow, the indicators you will use, and the rules you will define for entering and exiting trades. But having the plan is not enough. You must follow it. Maintain discipline and don't deviate from your plan. Now, let's go with the third recommendation. Learn to manage risk. Trading involves risks, that's a fact. But managing those risks effectively can make the difference between success and failure. Determine how much you are willing to risk on each trade and do not deviate from that limit. And remember, don't put all your eggs in one basket. Diversifying can help you minimize your risks. The fourth recommendation is about emotional control. We already talked about how emotions can be a major obstacle in trading. Learning to control your emotions and make decisions based on logic and not on fear or greed is vital for success in trading. When you feel that your emotions are beginning to influence your decisions, take a pause, breathe deeply, and return to your trading plan. Finally, the last recommendation is to avoid overtrading. Sometimes less is more. You don't have to be constantly in the market. Don't feel obligated to trade if conditions are not right. Sometimes the best action is to do nothing. Remember, trading is a marathon, not a sprint. With that said, we have finished the video. But before we say goodbye, I would like to reiterate some essential points we have discussed today and summarize them as a conclusion. Trading, as we have discussed, is not an activity to be taken lightly. It is not a game of chance or a magic formula to get rich overnight. Trading is a complex activity that requires a set of very specific skills and knowledge. First, you need to have a good financial education. Understanding how markets work, how prices move, what are the factors influencing them. All of this is essential for making informed and accurate decisions in your trades. Secondly, discipline is key. It's not just about having a trading plan, but being able to stick to it to the letter without letting emotions or the temptation to jump into the ring when it's not the right time take over. Speaking of the trading plan, this is another fundamental pillar. Without a defined strategy, clear goals, and a map to guide you, you'd be navigating uncharted waters. which could lead you to make ill-advised decisions that can cost you dearly. And finally, emotional control. As human beings, our emotions can have a great impact on our decisions. But in trading, it's vital to learn to keep these emotions under control, to avoid falling into traps like fear, greed, or impatience. So before you dive into the fascinating but challenging world of trading, make sure to take all these factors into account. Remember that success in trading is not achieved overnight. It requires time, effort, patience, and a lot of dedication. I hope these tips help you on your journey to success in trading. And remember, I'm here to help you every step of the way. So don't forget to subscribe to the channel and keep the notification bell activated so you don't miss any content. Thank you for being here today, and see you in the next video.